Look, I think from a GCC perspective, as you might have seen in the news, it's a bit far from the action in terms of reciprocal tariffs. So as you saw in the table before, most of the Middle East countries, and including all the 6 GCC countries, remain at the baseline minimum 10%. Most of the largest exports of the GCC to the US are actually excluded from the reciprocal tariffs. Only some sectors, like, for example, aluminium, subject to 50%, still subject to 50%, are being hit harder than others. I think it's important also to remind that in addition to the reciprocal tariff, the US administration has indicated that they are including analysis on different sectors that might come up with additional tariffs in addition to the reciprocal tariffs. And some of those sectors include some chemicals and petrochemicals. That is a very significant industry in the GCC. Some rumors might have indicated a 15% tariff on some of those chemicals and petrochemicals. So we need to keep an eye on those analyses that are yet to be released by the US administration.
Yes. Can it be argued, Carlos, that the GCC are perhaps net beneficiaries when you consider initiatives like Stargate, a UAE data center, and the deals that arose out of the Saudi-US investment forum?
Yeah, look, it's a bit early to see who's gonna, be the beneficiary on all these global supply chain disruption. But certainly, the GCC countries and the government countries, having been invested in diversifying from oil, having been invested in infrastructure, logistics, transportation, I think they are well equipped to be an alternative business hub, given the volatility and given the global supply chain disruptions. I like to see the US administration agreements from two angles. So the first one is, if you see from a US administration perspective, obviously in the GCC with the Trump visit in the month of May, there were a number of economic deals that were concluded in energy, defense, aerospace, and of course, technology and artificial intelligence to the data centers you mentioned before. But I like to see the US agreements a different perspective, right? And if you see the map from Europe to the East, we've seen recently a rush on diversifying trade partners and trade partners traditionally very linked to the US, moving away from that reliance. If you see the GCC in the recent couple of months,
yes,
including the BRICS meeting last weekend, we are signaling as well a diversification from those trade relationships, right? The GCC, in particular, you mentioned the Japan Free Trade Agreement. The UAE has initiated free trade talks with the European Union as well. And there is a clear indication as part of the GCC, Asian countries and China trilateral meeting in May that there is a push on the GCC China Free Trade Agreement. So a lot of things happening in the global landscape. And I think the GCC, as we say, might be one of those countries that might position themselves as an alternative business hub.
Understood. Carlos, you mentioned a very important word there, diversification. What's your take on fiscal management, tax reforms, AI innovation, urban transformation, and the overall drive to diversify structurally these economies within the GCC? How much progress are we seeing in these areas? Who's taking the lead and who's lagging?
Yeah, so look, all the GCC countries some years ago have established their own national visions. And I think they've been investing, as I mentioned before, quite extensively in critical sectors, including logistics and transportation, but also technology, artificial intelligence, etc. Fiscal reforms over the last few years in the GCC countries, implementation of new regimes in Saudi as well, trying to also be more competitive in the global landscape, introduction of special economic zones to promote foreign investment, provide additional incentives to investors setting up in those zones. I think the other one that is relevant mentioning in the context of the discussion of US tariffs is that the UAE has been doing their homework in the last 3 years or so since they introduced the first CEPA with India they've struck almost 30 free trade agreements in a period of 3 years' time. That's a record. In my view, I haven't seen this before in the 20 years I've been working on international trade, on a country concluding so many trade agreements and be able to diversify the trade exposure that much, right and left to the map, right? So I think it's really important to continue that diversification and that investment, and the GCC countries are doing their homework, in my view, in the right way.
Carlos, well, I've got to say, though, when you look at Saudi, the entire reform program is not going exactly to plan, is it? Ayman Al-Mudaifa, who is the CEO of Saudi Arabia's futuristic city, NEOM, has launched a comprehensive review of this mega project. Should we expect more belt tightening of this nature, given the falling oil price environment that arguably OPEC's latest policy may even aggravate?
I think what we see in the market, if I may take the question from this perspective, and what we see with investors is still a lot of interest in the GCC. There's a lot of interest in Saudi, but there is also a lot of interest in countries like the UAE and Qatar, for instance, right? There is still a lot of incentives and programs being released by Saudi. When we speak with our clients, they continue to ask about Saudi and the rest of the GCC, especially looking now, we are expecting in the next few weeks as some of those letters might come in, and as we approach the 1st of August deadline, to be still an area where investors are looking at, right? I mentioned before special economic zones, and I think a lot of trade is going through Saudi ports as well. So from that perspective, it will remain an area where investors, especially from Asia, as we are seeing with the latest developments from the U.S. trade policy and the U.S. administration, they are continuing to be looking at the GCC and including Saudi as well.